Welcome to a State Bank of India special as the Grand Old Bank celebrates its 70th birthday today. SBI is, of course, mini Indian economy, accounting for 20% of the country's bank credit, 22% of the country's bank deposits. 55 years ago, SBI was born when the Imperial Bank was converted into State Bank of India under the SBI Act. Since then, its deposits have grown, hold your breath, 25,500 times. Its profits in the latest year at 77,561 crores was 52,000 times what it was in 1955. When the nation is in trouble, it looks to SBI. At the height of the balance of payments crisis in 1991, SBI raised $1.6 billion through the India Development Bonds, and it repeated this feat again after a decade during the Pokhran nuclear test in 1998 when India faced sanctions. SBI personnel go on to head many other banks, Yes Bank included, and also staff the RBI and the SBI. You know, there is a deputy governor over there. Most important, SBI has changed with the times. In its 50th year, the bank gave its younger competitor HDFC solid competition in home loans and actually won that competition. Today, with its YONO, it is competing with even fintechs. And on that celebratory note, may I welcome the birthday boy of the day, SBI Chairman, Mr. Challa Srinivasulu Setty. Mr. Setty, thank you very much for dropping into our studio on what must be a big day back home at SBI.
Thank you, Lata. It's a great moment for all of us. And I wanted to be in your studio to celebrate this occasion.
We are honored. We are honored.
And, I think the journey of SBI is also synonymous with the journey of India. I think to that extent, it's a great moment to celebrate.
Absolutely, sir.
Thank you.
Actually, when SBI comes, one looks at the future. And so will our viewers. So just give us an idea. What are the immediate targets you have set the bank?
I don't call them targets, but we believe that if you have seen the journey of SBI, it always reimagined its role and stayed relevant.
Yes.
So we believe in SBI that going forward, while we have seen a lot of disruptions in the last 70 years, the disruptions will be much more frequent and much more deeper. So how do you handle these disruptions coming in, particularly in terms of your business models, in terms of the service delivery, in terms of customer protection? I think we all want to focus making SBI ready for another maybe 200 years. Okay. This is what. So the center to this plan is our digital transformation journey. While we have, as you mentioned, the scale, and we have the trust of the people, but the scale and trust alone will not make you the best and most preferred bank.
Yes.
So we would like to assure our customers and stakeholders that our investment in technology, digitalization will continue so that the customer engagement with us, which will be much more seamless.
Okay. Well, actually, would you say that in the journey, in the 75 years, the government and the regulators' attitude to SBI and state-owned banks has changed? I mean, first, PSU banks, after nationalization, were part of the fisc. There was financial repression. But in 1991, you all were listed. SBI was listed first. And after that, more recently, I mean, the CRR cut, there is no big danger in front of the country. Still, the CRR cut is given so that I think banks have a fair chance against mutual funds. Would you say the attitude is changing to give you all a fair chance?
See, the public sector banks are having a dominant market share.
Yes.
Some of them would have lost the market share, but I think they're all trying to...
Collectively, 60%.
Collectively, we are the dominant players in the industry, which means that any initiative, either by the government of India or by the regulator, cannot be meaningfully taken to the economy and the general public unless there is a wider participation of the public sector banks. I don't think there is any shift in the attitude. But one thing I can definitely tell you that maybe for the last 2-3 decades, or definitely in the current decade, is that we are getting a absolutely commercial banking approach. within the public sector banks, and what I call ownership neutral approach towards serving the customers, and that is getting reflected. Obviously, the CRR cut is not meant for only.
You're getting a level playing field.
Absolutely.
Okay.
Absolutely.
That has been the tone of the Reserve Bank, but I think the banking sector, that is public sector and private sector, have got a better deal this year with liquidity being thrown in and the CRR cut. How are you looking at this combo affecting your credit growth? I believe the finance minister also met you all. Do you think this year the credit growth will be much better? Last year, I think we are finishing at 9-10%, FY25. What is your sense of this?
Since our silent period started now, I can't...
I'm asking you about the sector.
We can't talk only about SBI, but I think in general, what are the preconditions for any economic growth? I think those things are being ensured fairly well in terms of ensuring that the system liquidity is adequate, and as you mentioned, CRR cut will add further liquidity to the system. Apart from the benefit of protecting the margins, which cost of funds are reduced, the other thing is that the upfronting the rate cut. These are all indications, signaling obviously is towards ensuring that the growth is on the higher pedal. I think this is
higher priority.
Higher priority, and the Government of India's initiative of putting some extra money in the hands of the people to encourage the consumption by reducing the rate of taxation.
You give me numbers for the banking sector, sir. I know I don't want to corner you on your silent period issue.
The banks will definitely come back to the credit growth.
So you think we could do 13, 14? I don't know how well you remember the 2002 to 2004 period. Reserve Bank had cut rates from 15 to 8%. After the Pokhran, we had to raise our rates, and then Asian crisis, we brought it down dramatically. But credit growth didn't pick up for another 2 years. It remained at 10%. And then only in 2005, we see this 25% jump in credit. When it slows, takes time to grow.
Absolutely.
But now do you think it can be faster?
I think it is. Stage is set in my view, maybe a couple of quarters from here. One is the corporate credit has been a challenge for the last few quarters. It is mainly because they're all sitting on a
retained profit,
reasonable cash availability to them. And I believe that a lot of brownfield expansion, which is undertaken by them, is being taken by their own cash. And that is also getting reflected. If you see the SME growth, we are all witnessing good growth in SME, which means that SMEs are basically B2B businesses, right? If the corporates are not giving the orders, they're not going to perform better. So which shows that the corporates are spending and also giving the orders to SMEs. But the next inflection point for the capital expenditure would have to come. One is most of them are operating at 75 to 76% capacity utilization. And a sustained consumer sentiment and consumption growth. It is not that it's not there, but I think people would like to see the sustained level of that.
You're saying that capex has not picked up, but it is looking all set to pick up.
All set to.
Okay. What's your sense about margins? Again, for the sector, I'm not cornering you, because you're going to get this. The rate cut will take away your margins, but the CRR cut will give you back margins, and it comes with a multiplier. Yeah. Every subsequent deposit will give you some gain. So will you come back to your FY25 margins in 4 quarters, 6, or for the banking sector? Does it take 4-6 quarters to come back?
Most of the banks have indicated that it will be a kind of U curve for the NIMs that you will have. I mean, there is no rocket science in that. There's a lag of deposits getting repriced, whereas...
How much? Is it 2 quarters lag, 4 quarters?
No, I think we'll have to look at Q4 end state.
Okay.
And most of us probably would be sticking to our margins at the Q4 end state. That is what I can tell you now.
I wanted to come to the SBI history itself. As you cast back 70 years, I guess you would have been at least for 1/3 of that.
More than that.
Yeah, more than that. Okay, 35.
37.
Half the history you have seen. Any one memory or any few things that absolutely stand out?
So if I have to, of course, there are many things.
Yes.
SBI, there's no dull moment in SBI that I keep telling that. But if two things which we have to see from an institutional perspective, not from individual perspective, I think the liberalization has completely given a new paradigm for SBI. See, till that time, you're a dominant player. We still are a dominant player.
The deposit and lending rates were set by RBI.
Absolutely. And then you have new age players. Post-liberalization, you have new private
bank
banks.
licenses.
And many things which have happened. My view, I think the watershed moment for banking as a whole and SBI in particular has been the post-90s.
Okay.
It has given both opportunities and risks. Risk of, we have completely had to remodel our risk management. That the global risk and your own internal economical risk, which needed to be relooked at, while the opportunities were aplenty.
Okay.
So I think that is one. And the second important element, I think, for the country, globally, I think, unprecedented COVID, was another thing what we really learned many things. It was an extreme business continuity process ensuring, right? You can't have a better testing of your BCB preparedness.
That's right.
I'm very proud that SBI has come out extremely well in terms of our commitment to customers.
Oh yes, not just that. Look at the quality of the balance sheet. In spite of going through a period when people could not go to work.
Absolutely.
I guess you have a historic low in terms of net NPAs now, 0.5% or less than that.
Less than
That's quite a record. But since you say 1991, you all got listed in 1990, right? Now, will you use this 70th year to mark some listings? You already have 2 babies listed. Will more come?
No, the babies will, I think, have to still grow up. It will take some time.
Okay. The market is kind. You're not likely to use
Not yet.
all-time highs, very close. And what about SBI itself? You're not looking to use the market's good
we
mood?
did take the enabling resolution for QIP
That is why I'm
of
asking.
25,000 crores. I think while the timing is not decided, we have time up to March 26 to launch this QIP.
Okay. So, again, let me ask you to, cast your mind back. What would you say were the most challenging moments for SBI? When did you all spend sleepless nights?
So, I don't think we spend sleepless nights because of, I think,
COVID.
crisis management inherent to us. Yes, I do agree. COVID was difficult, not because of any business environment. We had to protect the customers who are visiting our branches and, more importantly, protect our staff. I think if you really ask me from a management perspective, that was the most traumatic period which we all have gone through.
Okay.
And probably none of us have taken a day off, except when we ourselves got infected by COVID. Yeah.
Okay. What do you see as the advantages going forward because of digitalization? SBI had to bear the cost of putting a branch in a boat house in Kashmir, in probably an island off the coast of Kochi, or up in the peaks at Kargil. You have, I think in Natula you have a branch. So you'll have had to put these distant branches. Do you think branch costs will come down now because you can reach people digitally? Do you think sizes of branches will come down?
No, first of all, I don't think SBI ever looked at this obligation as a burden.
No, you didn't.
That also had helped us to have the reach, which is helping us to be a dominant player in deposits. First, that is what I wanted to say. But more importantly, 2 things what we are trying to do is, one is, of course, digitalization is going to help in reducing the costs and turnaround time.
Okay.
Today, we launched one business rule engine data-based SME lending platform.
Okay.
You would be surprised that approval is given in 40 minutes using the data. 40 minutes, which means that my operating people who are processing these loans can process more. So at the branch level, we have simplified the whole customer account opening journey. I keep saying that we open around 60,000 accounts every day. So when you're opening such large number, you have to cut down on our turnaround time. We used to take 3 to 4 hours to open the account, but on average it is now we are able to do it in 15 to 30 minutes.
Okay.
That means you can do more and you liberate your people to do various other activities. But what we are focusing is that how do you simplify the whole internal processes so that the customers can be served better. A lot of customer journeys have been reimagined. Today you can, do the fund transfer in 3 seconds, yes. 4 seconds. Yes. But why is that at the branch level there are cumbersome processes? We want to completely reimagine the internal processes, okay. So that our, we call a project called operational process reengineering, which will completely simplify the high volume business process.
Okay. But in that case, will you go down the path of unsecured loans since you are so confident of your digital data? Actually, the unsecured loans going bad, even in last year, when Reserve Bank blew the whistle, came as a surprise because we thought loans are being given by the entire banking sector on the basis of good digital data. Do you see now a chance of Reserve Bank lowering risk weights or banks themselves making more money on unsecured loans in the coming quarters?
No, I think the unsecured personal loans ecosystem looks better now, obviously. I don't think the risk weights will be reduced because it is only reinstated what was earlier the pre-COVID. But what do we see in the system is that less delinquencies in the personal segment. Okay. I believe the system level, personal level loan growth will come back. Okay. It may not be 25-30% what we witnessed, but I think it will be a double-digit growth rate. But in our case, let me also tell your audience and yes. you, is that we are the largest personal loan provider in the country. With
in volume,
you
yes.
never said. So, which means that our data-based appraisal system has held on very well. And we have the lowest default rate in the personal loans.
Personal loans? Okay, that's good to hear. At the moment, what is the biggest loan growing category? I mean, what would you bet? Your guidance was 13% loan growth. So, which would be the winning horses?
See, in our case, the growth comes from all segments. Okay. That's an advantage for SBI. We have several swim lanes. I keep saying that if one swim lane is not moving faster, we will go to another one. But I think it will be a broad-based credit growth. But for the system, I think home loans will continue to play an important role.
Okay. Despite the fact that we hear real estate is speaking of, despite
in some markets maybe, but I think overall nationwide, I think the home loan segment.
Real estate could be peaking off even because of commercial buildings.
Yes. So. And also because of the luxury segment. I think there will be more focus on the middle level segment and also affordable segment.
Affordable segment. Okay. What's your going ahead? What do you see as the big challenge for SBI?
I did mention in terms of the challenges that how do you stay relevant? Okay. And when you are operating at scale, how do you manage your risk? I think this is very important. A lot of people keep asking is that, your profitability ratios are low and all. We have the largest number of people who are engaged in the risk and compliance management. Okay. When you have a scale of, for example, as on 31st March, we were 96 lakh crore business was managed by us, both advances and deposits together. And 23,000 branches, 2,35,000 employees, which means that your aggregate risk can go out of hand if you do not have very robust risk management practices.
Fair point, sir. Fair point. What is your sense of, have you given your team a target for cost to income? Analysts will repeatedly tell you that your cost to income is higher than other banks.
So the effort is to reduce and moderate that. But as I mentioned, I think there's only so much we can reduce on the cost to income ratio because we have one of the most compliant organizations in the country, which means that we've spent a lot of resources on the risk and compliance management. But broadly, I think we would like to maintain at the level what we had in 31st March.
Okay. Well, that's a pleasure, sir. Thank you very much indeed for coming to our studios to celebrate your birthday. And please take back a message from all of us, wishing every SBIite very many happy returns and many, many more years of fruitful service to the country. Thank you very much.
Thank you, Lata, for having me here. Thank you.
Well, that's it on this very special edition of Indianomics. Thanks for watching.